Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to take a look at a few bearish headlines that are starting to come through on some big tech companies like Apple, NVIDIA, and AMD. And the goal here is not to be a wet blanket on the future of these stocks. In fact, I remain quite bullish when it comes to things like the QQQ as a whole, consumer discretionary. Some of the names that have certainly come down this year, I actually have a positive outlook for them throughout the end of 2022. But even as a guy with a positive outlook like me, we still have to keep looking through the headlines and make sure that consumer orders and corporate orders are all remaining above the trend line, because once those start to go down a little bit, it doesn't take a whole lot for a bearish sentiment to sort of snowball. And depending on your outlook, that could make for a fantastic buying opportunity. And of course, if you're into short-term trades, then it might be a signal for you to move out of a stock if you start to see those sales numbers go down. So let's take a look at what we got here in SeekingAlpha in terms of potential bearish headlines for Apple, NVIDIA, and AMD. Okay, so a few days ago, this headline came out: iPhone estimates cut at JP Morgan, but higher market share can still help Apple. And this came out on April 7th. Let's see what this is all about here. Apple stock slightly lower on Thursday as investment firm JP Morgan trimmed its estimates for the iPhone, citing limited upside from the latest iPhone SE. Analyst Samik Chatterjee, who has an overweight rating and a 210 price target, cut iPhone volume from 2022 to 245 million. That is actually down from 250 million that he had earlier, with iPhone SE volumes falling to 24 million from a prior outlook of 30 million. So this is mostly focused on the iPhone SE. In fact, they go on to say here, the analyst left iPhone 13 estimates largely unchanged, but the decline in SE volumes combined with slower App Store revenue resulted in cutting overall earnings estimates. And this is the key. So, a lot of this is noise until you get down to earnings estimates and revenue estimates. And this is where stocks could see some downturn if that continued on. Now, the main quote here from the analysts: we are trimming our earnings forecast for Apple, led by a modest haircut to our revenue growth for iPhone, primarily SE, and services. Although the overall reduction is fairly modest given the resilience of high-end smartphones, tablets, and laptops to the broader slowdown in consumer spending. Now, interesting to note as you go further on here, it ends on a positive note, this particular article. As the analyst says, we continue to see Apple well-positioned to deliver resilient performance and product revenue growth, led by share gains across the different categories of hardware products, as both enterprises and consumers increasingly adopt higher performance devices. So personally for me, I walk away from this article and say, okay, need to keep an eye on iPhone SE, but the flagship 13 and the general consensus of the analysts covering it still sound okay to me. All right, quick pause before we start on the next headline. If you're interested in learning more about SeekingAlpha, my affiliate link is in the description. Fantastic service, and you get 50% off 1 full year of premium when you use the link down below. Okay, next headline says, iPhone builds have dropped, expected to fall further, Loop Capital says. Let's see what this one's all about here. iPhone builds have dropped another 9 million to 254 million, Loop Capital said in a research note, citing reads, which is basically statistical reports they got from somewhere. Analyst John Donovan noted that Apple is likely to cut its iPhone build orders for 2022 to be between a range of 245 and 250 million, adding that the iPhone SE, which was announced last month, is likely to have its orders cut by 20 million. Now, this is where it gets interesting here in the next paragraph. In conjunction, Donovan noted that Apple is likely to raise iPhone 13 builds but only half of the decline of the SE as consumers opt for larger devices. So once again here, we've got, more or less a focus on the SE phone. And this analyst says that iPhone 13 builds are actually going to increase. So the previous analyst left iPhone 13 where it was in terms of orders and demand. This one goes on to say that they're going to build more of them, although only half of the amount that's equivalent to the decline in the SE. And to summarize that thought, the analyst added here, Donovan added that the smaller form factor iPhones have a finite following. And then despite this, clearly this lack of demand is surprising to Apple, and the pivot to more iPhone 13s is underway. So this is what I'm going to be interested in seeing. Right now, you have SE problems, clearly, that it's not as popular as we thought. But on the same token, that's a different story than iPhone demand across the board, right? So if I'm watching Apple intently, I may or may not care so much about SEs coming down if 13s and the larger units make up for the projected decline. So this is another bearish article that I'm going to walk away and say, TBD on that. It's very clear that the iPhone SE demand may be not as high as originally projected, but if consumers are just opting for a different version, the money's still going up to the mothership, and technically it should still pad other revenue streams like services. Now let's take a pulse of how earnings estimates and analyst breakdown might have changed with Apple over the past few months or so. This is a 6-month chart here. And you can see that if it's light green, you still have buy ratings. So not represented here, but if you started to see, say, red in this area, and then you started to see the price go down, then that would be an indication that, the analyst rating were having an effect on the stock price, or some sort of news item came to fruition. But at least right now on this chart, you still have a consensus of buy. When we look at the average price target, it's at 191. The stock's at 166 today, and you have a high of 226, a low of 130. And then if we come down here to see how the price target has changed, the consensus, that's what the orange bar is. We start maybe here in January of 2022, and it's taken a couple bumps up. And in fact, if anything else, it took another leg up in March and has remained flat since then. Then lastly, if we scroll down to the recommendations bar graph, with this one, you kind of want to see the top or the bottom getting bigger, smaller to really make any intuition out of it. And when I look at April compared to March and March compared to February, you have had another sell signal come in, but the strong buys in February were 27, March 27, April so far 27, and same thing with our buys. So there's not been a ton of movement on this. So all these analysts that are making headlines with their concerns over SE certainly don't appear to have changed their recommendations on buy, sell, or hold. Okay, let's switch gears and talk about NVIDIA. And just today, April 11th, NVIDIA drops as bear downgrades on worries over order cancellations and slowing PC demand. Now, NVIDIA is probably a little more interesting than Apple because I would say that its valuation multiple, is higher than Apple's. And when you have a higher valuation multiple, you're going to be way more sensitive to any of these little headlines that come out. So let's see what's going on here. NVIDIA shares fell in pre-market after investment firm Bear downgraded the stock and cut its price target, citing worries over order cancellations. Analyst Tristan Gira lowered the rating to neutral from outperform and slashed the price target to 225 from 360. Noting that he believes order cancellations recently started for consumer GPUs due to excess inventories. All right, so excess inventories, that's certainly a couple words that we have not heard in the past couple years, pretty much across the chip industry. Also says here that a slowdown in PC demand and the Russian embargo sanctions are likely to hurt the company more than the market believes. And then lastly, he adds that the upcoming fork for cryptocurrency Ethereum could compound the demand weakness. Okay, so that might be a good point. And like all these bear articles, they always end with good news, and that continues here. The analyst noted, however, that data center trends are still very strong, but it's likely that a peak in year-over-year revenue comes in the first half of 2022, and gaming-related revenue is likely to be weak for the rest of the year. Okay, so quick reaction from me on this one. Again, I think NVIDIA is going to be incredibly sensitive because of how high that stock was trending from a valuation standpoint. And unlike Apple, with the iPhone SE being, a weak product, this article is talking about more about the entire market. So it definitely bears watching. And if you haven't followed the chip sector for a few years, you may not have ever seen a chip correction. They happen quite frequently because they're all based on consumer demand and sales numbers. And as soon as those sales start to go down, then you just have this huge sell-off in chips. Next headline here, NVIDIA AMD lead chip decline as Truist finds hard evidence of order cuts. See what we have here. Analyst William Stein said that he learned of a sudden negative shift in demand for a number of manufacturers, including those for computing, consumer, and communications, to some of their semiconductor suppliers. Okay, well, that to me is a pretty vague quote. Let's see if we can see anything else going on. While first quarter results are likely to remain strong for the semiconductor industry, and perhaps even the second quarter, cracks are starting to form for the second half of the year and 2023. Okay, now that's interesting because if you think about the upcoming earnings season, you may see that these stocks hit their earnings on both the top and bottom line, but as always, everyone's going to be paying attention to that guidance. So if you have something where NVIDIA comes out and says, we're not so sure if our guidance will hold true through the end of 2022, that could lead to a major sell-off. Okay, so those were two pretty obvious, in my opinion, negative calls, right? Negative headlines, negative calls. Let's see how it has changed in terms of what the analysts are actually putting on paper. So if we go to the same chart that we looked at for Apple, the analysis rating history, you're still in buy. Keep in mind this chart is just the price of the stock, okay? So you can kind of throw that out. We're just looking for the color in general, which is green, and it's a buy. Average price target today, 338. You got a low of 200, a high of 410. And then I'm going to go down to the recommendations bar graph, and let's see what kind of changes we've had between April and March. Okay, so in March you had 26 strong buys. Here in April, 26 strong buys. Then you go to 8 regular buys, if you will, in March, 8 in April. Then holds, you have 6 holds a month ago. You have 7 holds right now, and 2 sells in March has turned into 1 sell in April. So at least as far as the analyst recommendations on buy, sell, hold, however negative these press headlines have been, it has not translated into a change on the buy, sell, hold ratings, at least not that I can see. Okay, one more headline here. This one coming from Taiwan Semiconductor, which is, of course, the largest chip manufacturer and has huge clients such as Apple, NVIDIA, AMD. So this was interesting when it came out. Granted, it was the end of March, so a week or two ago. Taiwan Semi chairman says consumer electronics demand is starting to slow. So this is a pretty big statement from a pretty big company. Let's see if we could dig into this a little bit more. Chairman Mark Liu said global demand for consumer electronics such as smartphones, PCs, and TVs is starting to slow due to factors such as Russian invasion and COVID-related lockdowns in China. Liu's comments, obtained by Nikkei Asia, which is basically a news source, pointed out that rising component and materials costs are increasing production costs, and such pressure could eventually be passed on to consumers. All right, so my immediate thought right here, when you get into these factors, Russian invasion of Ukraine makes sense. Does that go on forever or even another month or two? Hard to tell, but there is some hope that that would be alleviated at some point. Second, you have COVID-related lockdowns in China. In a perfect world, that space gets entirely better in the next couple months or so. All right, let's look for some positives out of here. And this is, to me, where it gets almost entertaining when you compare it to the article's headline. Liu added that despite the slowdown in certain areas of tech, Taiwan Semi would not change its growth targets or spending plans for this year, noting that other sectors, including automotive, high performance, Internet of Things, are picking up the slack. So that's an entirely different view than the way the article was written out. And then this quote cracks me up. We still cannot meet our customers' demand with our current capacity. We will reorganize and prioritize orders for those areas that still see healthy demand. So again, very similar to Apple and the iPhone SE. Maybe one or two products or consumers might be having a slowdown, but when it comes to the mothership, it sounds to me like Taiwan Semi is in a good place and they still can't produce all the orders that are being had. All right, investors, so we looked at a few headlines there that were obviously clickbait bearish. And when I think more about it in terms of the Apple and the iPhone SE weakness, I would say that that has a potential to be solved, hopefully by bringing iPhone 13 demand up to overlap what is going to be missed on the SE level. Now, on the NVIDIA side, the concept of orders being scaled back due to excess inventory, that can be very concerning if that keeps up. Now, if you're bullish on NVIDIA, I would say the bright side to those bearish headlines is it wasn't like it was analysts citing news sources and reports, right? So it's hard to say where that information came from and how legitimate it is in terms of the bigger picture for NVIDIA. And as far as the Taiwan Semiconductor bearish headline, or quote, if you will, you just dig a little further in that one and they're saying, hey, this thing isn't selling well as we thought, but good news, we still can't produce enough to satisfy demand, so we'll just pivot as necessary, and we are not changing the outlook for our estimates or revenue. All right, investors, let me know if you've seen some headlines like this and what it makes you feel about the rest of 2022 or perhaps into 2023. Before you go, don't forget to check out that special offer for Seeking Alpha down below using my affiliate link. And as always, please give the video a like, share with your friends. Thank you all so much for your support. We'll see you on the next video.